In small cap, there's a lot of growth small cap, but growth small cap has underperformed over the last few years because it previously had outperformed and therefore valuations were quite high. So we've seen a big contraction of valuations of the growth companies within small cap. And then the sort of more zombie companies stuffed full of cash amongst the small cap, they were trading on extremely low PBRs of, let's say, 0.4 times. Those have maybe gone up to 0.8 times. So I think from now on, it's going to be a lot more stock specific rather than factor specific.
Okay, all right, sure.
Yeah. And Tim, that definitely reminds me of the conversation around the great rotation in the U.S. Equities when we're really questioning this major concentration in the U.S. market as well. But bring it back to Japan. A lot of conversation with our markets guests have been find opportunities in domestic market-oriented sectors. I wonder if the same would apply to Japan as well.
Very much so. In fact, a lot of the investors we've been taking around Japan recently have been focusing more on domestic-related stocks that have, that have absolutely nothing to do with exports. So there definitely is an appetite there.
And when it comes to obviously the value up story, there have been some headlines. I know that it's a company-specific story, Toyota Motors going after Toyota Industries as well. Do you see the corporate reform story sort of being, at any point, questioned in terms of how foreign investors are looking into Japan at this point?
No, I mean, I think investors are seeing this as encouraging, and the TSE is encouraging parent subsidiary buy-ins. So there's still a lot of companies out there that say maybe are held between 30, 40, 50% by their parent company, and the TSE is encouraging these buy-ins or divestments.
Timothy, I wanted to pick up on the small cap story because I suppose so much of it does depend on how domestic demand is going in Japan. And we know that, consumption has been hurt by the inflation story. So how much of this is going to be driven, in your view, by wages growth? Obviously, we're looking at the tariff impact on corporates, but it is also structural, isn't it? Yeah,
absolutely. I mean, wage growth is fairly constrained. So we can't expect too much from that, but you have to remember that in the Japan's domestic market, it's really been dog eat dog. There have been way too many companies in each sector, so there's a lot of consolidation going on within each sector. And this means a lot of opportunity for small companies to either be bought or buy other companies. And remember also, we've got a rapidly aging population, so a lot of the founder presidents are retiring. So this is actually, again, a sort of a tailwind in terms of consolidation with each sector. And we're seeing that in the banks, for example. There's a lot of regional banks. There's a lot of consolidation going on within the regional banks.